Welcome to Key Points for September. This month, our take on the surge in the Delta COVID variant and what it means from a macro perspective, our views around the regulatory crackdown in China and a move to what's known as common prosperity, and why we think a taper tantrum will be avoided. Now, to the first point, there has been an alarming surge in terms of COVID cases from the Delta variant. This is particularly the case in the ASEAN countries, but also, of course, we're seeing it in the UK and the United States as well. Now, this will have an impact on the growth dynamic. We're seeing further lockdowns in China, in Australia, and many of these ASEAN countries, and that will trim the growth outlook. But it's also going to have an impact in terms of these important supply chains. They've already been under pressure. We've seen bottlenecks occurring as a result of the huge demand for manufactured goods. And these lockdowns are going to exacerbate that problem further. Now, we think we will get through this towards the end of the year and into next year, but again, it's a reminder of why it's so important to have mass global vaccinations in order to allow these economies to remain open and functioning. Now, turning to our second point, the Chinese authorities have been really beefing up their regulatory environment, cracking down on some of the large technology and private educational companies in recent months. And this is something that we think will continue. It has had an impact on the financial markets. We've seen the Chinese stock market indices falling about 15% year to date, in marked contrast to the surge of about 20% in terms of global stocks. But this is something the authorities seem prepared to tolerate in a bid to improve the regulatory environment. They're also moving towards a policy that's known as common prosperity. This is trying to have more balanced growth, resulting in fewer mega-rich and very poor people, and resulting in, as it implies, a more common approach to income distribution. Now, this is likely to be ongoing. It may well have a disruptive impact in the financial markets, not really knowing what kind of regulations or restrictions will be imposed. But as the Chinese economy begins to slow a little bit from some of these lockdowns that we've seen, we're expecting further stimulus to come through before the end of the year, both from a fiscal and monetary perspective. This should not only bolster the economy, but it should improve the sentiment around the financial markets in China as well. Now, turning to our third point, taper tantrum. This was a phrase that was coined in the Bernanke era in 2013, when the removal of some of the QE stimulus resulted in the market being surprised, investors being surprised, and sharp falls in equities and credit markets. The current Powell Fed are going out of their way to make sure that the financial markets are very well aware of what policy is likely to be. The US economy is in a very strong footing, and they believe we're getting to the point where it's now right to reduce some of the stimulus that's being applied. Remember, this is not tightening policy. This is just reducing the amount of additional stimulus every month that is being applied. Currently, the Fed is purchasing around $120 billion of Treasury and mortgage-backed securities, and they feel now it's getting to the point where they can scale that back somewhat. Now, we think this is prudent. We've got the US financial markets, equities at record highs, government bonds at incredibly low levels, and therefore this seems a prudent move. And we also believe the Fed will be pragmatic, and were the economy to slow quicker than they're expecting, we think they'll back off from that move and make sure that the market is very well aware of the policy. The last thing they're trying to do is surprise. So there will be a systematic and clear approach, we think, going forward. Now, remember, our full report can be read, as always, on zurich.com/MSME.